Alrighty, guys. Thanks for sticking around for the end-of-day webinar, end-of-week webinar, just before the long weekend. I do appreciate you guys sticking around. I understand it's been a bit of a slower afternoon, so again, I definitely recognize and appreciate the dedication to be here for this. And yeah, so I just thought I'd cover a few topics and to lead us into the weekend. And I hope everyone had a good week. So today I actually finished slightly red, just around $170 loss. So not a great day for me, but small loss overall. I pretty much attribute that entirely to just not really following my system as well as I usually do today. I kind of knew that today I needed to scale back a bit, so I traded pretty small, so which is why the overall loss was fairly small relative to what I usually do. So sometimes you are your own worst enemy, I guess, and this is something that just happens from time to time. You might have all the right ideas and just all the wrong executions, right? So I was definitely liking eyes short, EYES, especially as it was kind of, like, I'm just going to show you this really quick. It was really wedging. There was a nice support pre-market around 150. It seemed like a good place to short it because it was going through VWAP, right? If you sort of put a line, like put a line at 150 and then draw a second line right here, you can see that downward wedge coming in, that sort of bear flag. So I'm not sure why I talked myself out of that this morning, but I just didn't take it. It broke pre-market. I decided that it wasn't going to be meaty enough, and I was wrong. It was quite meaty. A lot of good meat on that. So yeah. Unfortunately, eyes was one of the first ideas I had this morning. Didn't trade it. Would have turned out to be a nice trade. Let's talk about ADPT. I started off with a winning trade on this one, shorting in the morning. Made some decent covers, and then, man, this thing just would not go away. It just wanted to hold and hold and hold, but ultimately, you know, I needed to be there for the short through 32. That was the whole plan today, was once 32 breaks, I want to be shorting it through 32 and riding it back towards 210. So I guess the one thing I can contribute to today is missing a few key signals. And I think that starting in early on ADPT was kind of frustrating because the stock just wouldn't do. It was just chopping around a lot, and I guess, you know, when you start in, if you are going to do the thing where you start in a bit early, you kind of have to widen your stop a bit and leave some room for it to breathe. And then when you get your real signal, add into it. But typically I don't really bother with the starter as much. I just go for the signal and do well with that. So that's probably what I'll stick to doing from now on. So yeah, I mean, this actually would have been, this probably would have put me green on the day. And then Cali. And then if I had nailed Cali, I would have been golden. So, you know, it's really just my own fault for not executing the trades that I should have. And then I executed the trades that I shouldn't have. So kind of just... a little bit of trading, it's a little bit of a psychology issue today, I guess. But anyways, like I said, I traded small today, and I think Monday will be super easy to get back in the green. This is actually the first day this week that I started the day off before lunch red. So coming into the afternoon, I was kind of thinking, like, you know, if I see an A+, I'm going to trade it, but otherwise I'm not going to fight for it back. I'll make it back super easy on Monday with whatever is in play. But I thought that would be a good lead-in to talk about what... the question I had in general chat about, you know, one of our friends in the group was mentioning that he, for two or 3 weeks, this is before he joined us, but for 2 or 3 weeks he was doing really well, probably with the morning, I'm guessing with the morning momentum. And if you want to just tell me in chat what your main strategy was, if you want to just punch it into general, but I'm guessing that you were probably trading a lot of the morning opening momentum on gap ups. And, you know, I think that for newer traders, sometimes one of the worst things that can happen is seeing early success. And I've talked about this before, but for me, I got beat up a lot when I first started. So I got defensive, and I knew I had to figure out some solid strategies. Sometimes the worst thing that can happen is the early success, because then it gets you thinking that it's going to be easy to continue with it. And then usually it's just a change in the market that you don't know to adapt to that can start to deteriorate that strategy. Then suddenly you realize that you are kind of lost and you don't know what to do next. A lot of people, unfortunately, keep doing the wrong things and expecting the same result. Some attempt to fix it, but the thing is, for a lot of people, once they fix it, then the market's changed again. So the hardest part, I think, for a lot of people, or one of the most challenging parts of trading, is just staying one step ahead of the market and just knowing how to quickly adapt to those changes. And this isn't really a new topic. I've covered this before. I mean, if you dig through the 100 other webinars I've done, I've probably have about 4 that I've mentioned or talked about these topics. But I guess today's kind of like, even just from day to day, like today's an example of where maybe there's a bunch of plays yesterday, on NADL and ADPT, but then one day later, going into today, knowing that it's a day before a long weekend, we could probably suspect that it's going to be different feel in the market, different action, and you have to kind of adapt to that. So it's definitely something that comes with experience. But I try to do my best to kind of let you guys know what I'm thinking and what my overall thoughts are on the way the market action is going and how much risk I'm willing to put on and stuff like that. So hopefully that's kind of helping you guys follow along and sort of figure out where you want to be based on that action and based on my comments on the action. So but yeah, I think that the one thing that, and I probably sound like a broken record, right? But I hope you're still here listening. But if you are, what you'll want to do is probably just make sure that you're logging, somehow tracking the trades that you're making, so you can find out what's going wrong in them. Because sometimes it's just one small piece that you need to figure out. So maybe if you're chasing the entries too much, maybe that was working 2 weeks ago when things, like let's say 2 weeks ago things are just ripping and then that strategy might work for the week or two when things are just super momentum filled, but then after that, it just may stop working altogether, and then you're kind of like, well, what do I do now? So one thing that I've noticed, this is the biggest trend that I've noticed in the last 2 weeks, which I think is super important to pay attention to, is the fact that we rarely, like very, very rarely, do we get secondary moves on the 5-minute chart anymore. It's been absolutely astonishing how almost every secondary move fails in the last like 3 weeks. Anytime we have a runner like this, there's no more like, second 9 EMA 5-minute hold and break out again. It just hasn't been happening. So I've really been focused strongly on shorting those fails, right? So when it comes up and it looks like it's going to break out and then it puts in a lower high, we got to be on top of shorting these. So if you want to play the gap strategy where the stock's gapping up and it breaks the highs and you want to buy it there, it's an easy enough strategy to follow. It doesn't take a rocket scientist to figure that out. But I think it's a bit more of a risky strategy. When it works well. But then when it doesn't, it's going to throw you deep in the red in the morning, really early on, right? So that's what I don't like about it. So typically what I'm doing is I'm looking for a secondary setup where it's clean and shorts are getting trapped, and then it looks like it's holding, and then we buy for the secondary move. But like I said, last 2-3 weeks, it just hasn't been happening. There hasn't been secondary moves, so I've been more or less looking at shorting the failed moves. And if this continues, I'm just going to get more and more aggressive on shorting them until it stops working. And then when they start making secondary moves, we'll just flip it and start looking for secondary longs again. But has anyone else noticed that trend? That's like definitely something that I haven't been able to ignore. It's been so apparent. Let's take a look at like ADPT, because this is one that, look, I mean, even ADPT, there's no secondary move here. This is a massive move, right? But this is just one move. The secondary failed. So when I look for a secondary move, it's typically I'm looking for the 5-minute chart to have a full-size pullback like this, and then set up again for the second move. Because that's usually going to be the safest spot to enter. It's going to give you the best risk reward, and it's going to be in a spot where there's going to be some clear support, so you're really going to be able to plan the trade well. And this way, like I always mention, this way it gives everyone time to think about the trade. It gives me time to explain the setup and everyone to get involved. So I think it's only a matter of time before a lot of the people that have been shorting these moves, which we have been and will continue to do until it stops working, kind of get caught doing that. It's like once you get complacent, once you're getting used to longing everything off the open, then it stops working, people will continue to do it even though it stops working. So we need to flip it quickly, and that's where I think I really do shine a lot of the time, is just being able to really look at both sides of the trade, both sides of the market, and be quick to be able to change my bias on a stock or a trend or the overall sentiment. So as soon as these secondary moves start working again, we're getting way more long bias. We'll be looking for them to hold, looking for the shorts to get trapped, and looking to get long. But as of lately, if you get access to good shorts, there's a lot of good money to be made on shorting these failed secondary moves, because like 98% of the time, they're just not working. They're just not going for the second push. So I thought that maybe ADPT would be the one. I keep thinking that, like, you know, this is going to be the one that shorts are going to get killed on. This is the one that the secondary move, it's going to hold, and then we're going to get long. So I was really looking for this one to reclaim 95 yesterday, so we could be on top of that for the squeeze. But just once again, they just can't seem to do it. So that's a very important trend to understand, that right now secondary moves aren't happening, so you shouldn't be trying to buy these dips. You just shouldn't be doing it. Okay, so if you're going like the gap strategy or whatever, if you're chasing momentum off the open, if you're using some kind of strategy off the open, like what I used to do is I would take whatever stock is gapping and then buy the first 1 minute pullback. So what I would do a lot of the time, and this is still a fairly valid strategy, I just think it's harder to follow on the stream and it's not as a high probability of a trade, but what I used to do a lot of the time is I wait for the whatever stock's gapping, doing volume momentum off the open, I'd wait for the first 9 EMA pullback on the 5 minute, buy it, give it a 10-cent stop, and then go for the secondary move. But then what I started finding was I was way more consistent with the 5 minute chart secondary move, because by that time it's gotten like basically all the chasers up here washed out. It helps get all the shorts involved because it takes a little more time for that 5 minute chart to set up. And then it also just tends to give a better risk reward scenario, and overall I just seem to have found more success with that bigger scale secondary setup where you're looking on a 5 minute chart set up at 1. Give it some time to consolidate. But I don't think there's any harm in you guys experimenting with other things. Like if you think that, you know, maybe for you what you want to do, and I'm not sure what your strategy is exactly, to the person that was mentioning to me, and I'm sorry I can't figure out how to pronounce your name, but what you're mentioning, Carl, it's Carl. So yeah, I mean, like what you're mentioning in chat, I'm not sure exactly what your strategy is on these. Maybe you're buying them, like maybe you're kind of chasing them up a little bit, but if you're looking for something that may work a little more consistently, perhaps what you want to do is, if you like to play the morning momentum, is just look for whatever stock is doing pre-market volume, and then once it makes that first initial move on the 1 minute chart, you might find some success in buying that dip. But like I said, for me, I find it works sometimes. If not, you just lose 10 cents in the trade. It works quite often, but I've been a bigger fan of trading the 5 minute secondary setups after we come back and retest VWAP, and those ones tend to work really, really well when they work. But it's been actually easy to recognize the pattern, which is the pattern being that it's not working anymore. And luckily for this, this is typically a good setup. This is consolidating over VWAP, right? Luckily, I have one more little piece to my strategy that I've been using lately that's been a huge time money saver, which is if I see that consolidation, I won't buy it until it gets over the resistance. But yeah, has anyone else noticed that very clear indication that we just have not been getting the secondary move, right? So it's just you just wipe that out of your strategy. Just stop looking for the secondary move. It's not there. So I'm more short biased now on almost every one of these. After they run up, I'm just looking for the support break to short it, and that's been working for now. But the key is, once that stops working, and I mean like two days in a row of it not working anymore, I'm already changing the long side. So I'm very quick to adapt. One other thing that I wanted to mention, and I've talked about this a lot before too, is don't get blinded by just the positive side of the trade. So try not to, like for example on ADPT, on that huge run up on yesterday, this huge run up, a lot of people will they'll be looking at this and go, oh, if I short 325, they're just looking at the positive side. They'll be like, if I short 325, then this is gonna be back to 225 by the end of the day. I'm gonna bank huge. But they're not thinking about the possible drawdown of taking that trade on the front side. And then they might find themselves stopping out right through high a day and just taking an awful loss because they weren't thinking about both sides of the trade. So One thing that, like, just hearing me talk out loud when I plan my trades, the first thing I plan for is the loss. You might notice that, right? I plan for the loss instead of the win. I know it sounds weird, right? It sounds kind of silly, but it's the truth. The first thing I plan for is where I'm going to stop, how much is the risk, how much is it going to cost me if I'm wrong, and what are the probabilities that I'm going to be right. That's, I think, the smartest way to look at every trade you take is go, what am I willing to risk? How good is this setup? What's the drawdown going to be? And then once I feel like the risk reward makes sense, I'm going to look at the positive side. Okay, if it works, then I'm going to be targeting X levels. And then once I find a comfortable situation where I'm like, okay, I might risk 200 here to make 600 or 800, then I'm like, good, pull the trigger. This is a setup that I've documented, journaled, it works. It's my setup. So that's a really easy way to just get out of your own head with the psychology, and with the self-doubt or whatever, or pulling the trigger, whatever the issue is. Just focus on the trade. So it's either going to be, I'm either going to lose X amount, or I'm going to make 3 times or more that X amount that I'm risking. So if I'm going to risk 100 to make 300, risk 200 to make 600 or more, etc. So what you'll notice is I do scalp around a little bit sometimes, especially in the morning momentum. Sometimes I'll be like in and out a few times of things, but I'm typically just really interested in the trades that are really going to bank, the ones that we can get a 10, 15 cent risk and a 50, 60 cent reward. Stuff like, is it CNTF? No. Stuff from the journal that we've been trading lately. I already forget the name of the ticker. CLNT, stuff like that. CLNT, bigger stuff that we can really sink your teeth into it, really take a big chunk of it. Overall, the risk is low, and then you don't have to really worry about, what could happen if you stop out. As long as your entry is good, it's like it doesn't really matter if you stop. All that really matters is that you're following your trade plan, and that the risk reward makes sense, and that you execute it according to your system. So yeah, my best advice is, again, if whatever it is, and again, you didn't really explain, or I didn't see anything yet about what you might have been doing that was working for 2 or 3 weeks, but just adapt, and I know it's easier said than done, but hopefully just being around us can sort of help you get a feel for how we, from day to day, from day to day, from minute to minute, I change my biases, I change my opinions about the way I think things are moving. I change my opinion about probabilities of trades depending on the overall market and what things are doing and how things are moving. And when we're in a market where things are making monstrous secondary moves and stocks are running 300, 400, 500%, which I can't wait for that to start happening again because I'm more than ready for it. We just switch it up and we start getting, we start putting on a little more size, at least I do. And I really want to capitalize on those big momentum shifts. And especially early in the cycle, when everyone's still shorting the secondary moves, I might get caught once or twice, and then I immediately change and I'm looking to get long and start riding the right side of the trades, right? So it's okay to be wrong, but it's not okay to stay wrong, all right? So you're never going to be right 100% of the time, but to continue doing the wrong thing over and over again just means you need to adjust the strategy a little bit, look at what you're doing, look at it objectively, figure out if there's something that you can do to change it. I think that, yeah, guys, and in this particular market that we're in now, I think it's a huge help to be able to go short. I think it'd be very challenging to only be able to go long in small caps right now. You would be pretty much, I think that if you only have the option to go long, you should be looking to play that dip buy strategy on the early dip buy on the 1 minute on gap and go stocks. That's probably your best bet at making some money in the morning and then just lock it in. It's been very difficult to find really good setups otherwise on the long side, I'll admit. With the exception, of course, of a couple big tickers we've seen recently. But yeah, I think that definitely on the long side, you would have to be pretty patient for the last few weeks if you're trading mostly small caps, unless you're jumping in this morning momentum, which again, I think that it's the kind of thing that it can be really good and when it's good, and it's really bad when it's bad. It's usually a lot of people getting caught when it doesn't work, and it can be ugly, but as long as you're keeping your risk low, trying to keep stops pretty tight, If you buy a dip on the 9 EMA, you can give yourself a 10-cent stop, and it's usually going to be okay if the momentum's still there. But whatever it is you're doing, just keep evolving, keep adapting, and I do hope and I do think actually that just hanging around with us is going to help with your trade planning, execution. The trade planning is a big thing, just objectively making a trade plan that makes sense, and putting yourself in a position where the risk totally makes sense versus the reward, and you can be comfortable with the plan. I was thinking about something earlier today when I went to lunch. I'm always thinking stocks. I never stop. When I was going to lunch, I was thinking about using hard stops and just set it and forget it. I was thinking, well, maybe I should try that for a week and see how I feel about it, because there's certain ones that I like to try kind of trade scale in and out. I take my triggers, but then sometimes I'm like kind of dipping in and dipping out, and you guys know that I usually cover in fours, right, or sell in pieces of 25% of my position each time, which I like that strategy. But there's certain times where a set it or forget it would be like, set it and forget it would be like the thing to do. So like HTGM, for example, when it finally broke, let's say, for example, like when it finally started to put in lower highs here and then broke 723 support, if you could short it, set a stop somewhere like 40 or something, and then just sort of let it go. Let that stop do its job, and then just sort of let it work for you. I haven't experimented with that strategy so much. I very much do micromanage my trades, from pretty much from minute to minute. And certain things in the charts can affect my decisions. Like for sure, like I could be targeting a certain area in a stock, but then I might notice some price action cues, some higher lows coming in, some moving averages starting to turn back up, and I'll cover it. But often that will be the right thing to do. So just a thought though. Some of you might do better with set it and forget it. Get the trigger, put the stop in, and just let it work. So everyone's going to be a little different, and I've said this a million times, but it is the truth. There's really no one size fits all. You can learn a lot. You can be comfortable with my strategy or whatever, but you should tailor it for your personality type. Maybe you don't want to micromanage the trade, so maybe you want to trade smaller. I think that sometimes I micromanage because I have some more size that I'm comfortable with, that I'm 100% comfortable to walk away with, right? So there's like size that you're comfortable to sit and watch, and then there's size that you're not comfortable to leave the computer. Do you know what I mean? Like there's certain times where you're not going to just want to walk away with a position that could hurt you badly if the stock really ripped and your stop didn't go off. Do you know what I mean? So maybe for some people the way to go is smaller size, a little bit of a wider stop, set it and forget it, let it work for you, experiment. It's all about what works for you. And I think that people are extremely arrogant and extremely ignorant who think that there's only one way to trade and that there's a one-size-fits-all system. They're 100% wrong. And it's just a very ignorant statement. So I hope that helps, man. And we'll continue to do these webinars every day as always. And if you have any suggestions or any thoughts and any ideas of topics that you think might help, I'm always open to it. I love talking about trading psychology because I'm really big on that, and I've learned a lot about it over the years. And I've had about every psychology problem in terms of trading like that there is, from not being able to pull the trigger early in the day to being scared to lose to trading too tight and always stopping out. I've had to adjust and pivot and adapt over and over and over again, and I've had to conquer a lot of psychological barriers in my trading. And we still continue every day, no matter what level you're at, no matter how long you've been doing it for. There's still going to be days where you're just still sort of battling psychology. Or on a day like today, for example, where I have all the right ideas but all the wrong executions. It's like, I guess I've gotten to the point now where it's frustrating when that happens, when you have the right ideas with the wrong executions. But the way I see it is I've really gotten to the point now where it doesn't really bother me. I'm just like, it's just another day. Tomorrow, Monday, I'll come in and nail them again. So the key is just keep the bad days small. I typically keep my losing days quite small. I haven't had a big mess up in a long time, knock on wood. But hope you guys have a great long weekend, guys. It's finally springtime, and I know a lot of you guys live in the West Coast, southern West Coast, and I'm ultra jealous of the nice weather you guys get every day. But when we get it here, we really appreciate it, man. We get about 3 or 4 months of some decent weather, and then it's just Well, and then I do a lot of trading. So, but guys, have an awesome weekend. Thanks for a great week. Thanks for sticking around for the webinar. I hope you enjoyed it, and I'll post it up on the website some point tonight, hopefully, if not this weekend. All right, guys, thanks again. Have a great weekend, and we'll see you guys on Monday morning.